What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. I'm still feeling a little under the weather. As most of you guys know, I was out of the country last week and got back, caught some kind of bug, trying to get over it. But I did want to get a quick video out, kind of just show you what I'm seeing in the market, what I'm looking for Bitcoin. Also wanted to talk a little bit about Evergrande. As you guys have probably already heard, they've been ordered to liquidate. We'll see if that happens and what that does to obviously the Chinese markets and then rolling over into the US. Let's take a look at a Tesla at the end. We'll also be taking a look at that. We'll be taking a look at the gaps, the CME gaps on Bitcoin. I was on Marty Party's Spaces yesterday and had some people on there asking about the gaps. So we're going to go over that. And then, of course, we're going to take a look at that ever so strong XRP chart. So let's get into it. We'll start out with the macro on Bitcoin. As you guys know, I think this is a macro 5-wave structure looking for ABC correction down. Now, usually when we do have a correction at ABC after a 5-wave count, it gets somewhere around the 4th wave count, right? Now, a lot of people are not going to understand why 1 looks so big when really it's the smallest wave. 3 is the second biggest and 5th is extended. It is on the log scale, so that skews the view of everything. So, and it's too big to put into a linear scale, but do it yourself. Check it out. So as we've been talking about over here, right? So this is the 2017 bull run where we had our bottom fall, and then we came back up to our golden pocket. Now, way before this happened, I told you guys to watch for that. We did hit it, and imagine that it was right at the ETP, not ETF approval. Again, look that stuff up yourself, the legal writings. It's an ETP, not an ETF. An ETF would be more than one thing. Bitcoin is one thing. It's an exchange-traded product, right? So anyways, and one other thing, ETPs can be protected as like a plunge protection. If they fall too far, they can stop trading. They cannot stop trading on Bitcoin, guys. Remember that. You just cannot stop trading on Bitcoin. So certain exchanges can, but not everybody's going to stop at the same time. So just be careful with that stuff. Anyways, I do think there's a very good likelihood that this was the top here. And as of right now, we are below the 0.5 fib. If this holds as resistance, your next target's going to be this 0.382 fib at about 35.9. And then you have 28.1 down here for the 0.236. Again, guys, my targets still remain the same, anywhere between 35 and 97 for our bottom, our true bottom. I've been warning you guys for 2 years that we would have a false bottom with a big rally to get everybody bullish again, screaming new all-time highs, which we're there. And afterwards coming down to the true bottom. I still believe that's where we're headed. If you look at these high volume nodes here, they match up perfectly with not just the high volume nodes, but the CME gaps, which I'm going to go over here in a minute. If you guys are interested in trading, definitely check out Prime XBT. By far my favorite exchange. They don't trade against you like the scammy exchanges that close your orders before, or don't close them when they should. Be careful with a lot of them exchanges. Definitely check these guys out. I have a link down below. Use my link. You can get up to a $7,000 bonus and 25% off your fees by clicking my link down below. All right, let's get into, let me zoom out a little bit on this. This is the 4-hour. If you guys watched my last video, this was my target, 489. We did not quite hit it, but if we look at where we broke down, I told you to watch for a breakdown from here, which we got our breakdown. We bottomed out here at 38.5. Now let's take a measured move, right? Now this measured move I'm about to show you, this is the width of this whole channel, and you bring it down to where it broke out. That gives you a target of 34.2, right in that range, right? So we still have a possibility that we can stay above these EMAs here, get all the way back up, and actually retest this trend line. We did not quite retest it yet, unless you want to count this retest right back here after we first drop it retested, but there's still a possibility we can get up here, get a retest before a continuation of the downside. Now, it doesn't mean we have to. It means that is a possibility. Once we break this bottom trend line here, depending on if, when, and where, it's around 39,000, depending on how long it takes. Could be 39.5 if it takes weeks, right? Once we break that, we have obviously our 34.2 target, and then we have another target. We take the measured move from the widest point right here, and let's say it breaks down in the next couple days, right? And breaks this 39.2. Then you bring it down to where it breaks. Again, if it breaks, that gets you down to around 26.7. If we go over here, there's a lot of confluence in them areas, right? This confluence for the 34.2 is right in here, right? Where it broke up and held for support. And then down here, you can just see all the choppy action right along that 26.7. So those are my areas to watch for the downsides. Again, we're going to get bounces. If you want to try to long those and catch those bounces, the cool thing about trading is you can make money whether you go up or down. It doesn't matter as long as you play your cards right. All right, let's take a look at the CME gaps. So if we go back here, you can see these yellow lines. These are unclosed CME gaps. We have one all the way back here at 3,500, right? This was back after. You see it's way over here. It was after the CME, right? After the CME futures were approved. And then we have another one here right at 75.40. Another one here at 11.2. Another one here at 11.30. Let's take a look at this, and we obviously have our 9,700 gap too, which again aligns with all of the high volume nodes. This bear market rally, right? Massive bear market rally. If you caught that, kudos. But again, I'm looking for long-term areas to get in. Will be down here below 10,000. Once we hit 10,000, I might start buying a little bit, right? For a hold position. Nevertheless, I'll be shorting this on the way down for sure. Now, what people don't understand about when you're shorting a market or longing a market, you're going to lose some, right? You got to keep your losses to a minimal and ride the winners. Once you learn how to do that and minimize your risk, learn risk management, you can do awesome in the markets no matter which way they're going, no matter if you're, catching every trade. You don't have to catch every trade. I like to catch the big ones, ride them out, move my stops into profit, and just keep riding, right? So anyways, those are our gaps. The next gap from this point is 20,275. Big, huge gap right here. I'll zoom in so you can see it right there. And then we have this gap here at 11.2. I'll zoom in so you can see that right there. And then this gap here at 9,700, which aligns with a lot of stuff, guys. Remember, bubbles pop, they go back to where they began. That's around where it began. So just so you know. All right, take a look at the monthly. You can see the trend line down here on the monthly. I've showed you guys in previous videos. If you look at the RSI, right, we had a touch here. We got our touch at the top, touch at the bottom, touch at the top. No touch at the bottom here, none. False bottom, right? Big rally. Now, if you look where I have this trend line drawn, let's draw the same line up here. Lower highs, higher highs, hidden bearish divergence. Monthly is still in a downtrend, guys. Downtrend, right? So yeah, I still think we're going to come down, retest this trend line right here on the RSI, which will also get us down to these levels, which could be around that 9,700 range, could be lower, but that's what I'm looking for. I've said it for 2 years, 3,700 to 9,700 true bottom. I believe that's still to be true. Nothing has changed in my opinion at all. As you can see here, this is just another chart showing you the golden pocket area, which once we nailed it, get rejected, come on down. Another way to look at it, you had your impulsive 5 waves move down. You have your ABC corrective wave up. So you fell, what was it, 69 all the way down to 15. So like 55,000. $55,000 drop in a year, and then you made a 45, no, it would have been 32. I can't even add right now, sorry guys, my head is so clogged. But anyways, in a year, you made it up a lot less than you made it down in a year here. I believe this will be another impulsive wave structure to the downside to get to our true bottom. Tesla, we've talked about this forever. Remember when we broke here, I gave you these targets, 49, 106, and 151 for bounce areas. We got a bounce at the 106. Came all the way up to retest this trend line, just like we're doing right now in Bitcoin, right? Got a retest, come back down, made this bear flag. And I had told you if we broke this level here, which we did. Now we're only getting a bounce here at the 0.382 fib. As long as we cannot get back inside of this, right? Our measured move for that is actually lower than 50, but I'm a buyer between 50 and 60 bucks. Been saying that for 2 years also. Could get as low as around 38 to 39 bucks down in this range. And if we go over here, look at that. It's returning where the bubble began. That's just what happens in markets, guys. It's all about structure. Here's your XRP chart, the absolute worst chart ever. It's a dying, it's a chart, the chart pattern. I'm not saying it's a penny stock. What I'm saying is the chart pattern is a dying penny stock. Each hyped pump gets lower and lower and lower. They cannot push it up. My target has been and still is between 4 cents and 26 cents. If this 26 cents does not hold, 4 cents is coming for XRP. And I do feel sorry for all you XRP holders out there that believe in this hyped project that is full of people that bought up here just wishing they could get their money back. And when it even gets close, they dump on you. And they're realizing more and more that it can't get up that high, and they dump on you earlier and earlier and earlier and earlier. They're getting the hell out. Not financial advice. None of this is. But if I was giving you financial advice, I'd say stay the hell away from XRP. Anyways, have a great day, guys. I'm out. I will try to make some more videos this week. Hopefully I'll feel better. Thanks again for watching. See you in the next one. Don't forget, check out my links down below. Oh, and I will be going on my Twitter and posting promo codes for a free $200 account. You don't have to have any deposit. Only one person can use each one I put up, though. But if you follow me on Twitter, you'll see the code. It'll be a series of letters and numbers. Put that in the promo section, but you need to have an account set up to be ready to do that. So set your account up. I will be doing one of those giveaways later on today. I'll send a tweet out prior and then send the promo out after that tweet like I did the other one. Thanks a lot, guys. I will see you in the next video. Be careful out there. Let's see what Evergrande does to the markets. I think it'll be a very interesting couple of weeks to months just over that news. So thanks a lot, guys. I'm out.